let us continue practice management on page 48. Let's continue from page 48. Obtaining and charging for professional.
Page 48.
Yes. Practice management, we said it's all about the business side of our profession. How can we monetize our knowledge as accountants and make it available for general public? So how do we charge? Don't forget we are people that we are not selling. We are selling services. And you see, if you've sold good before and you sold or you are selling services, you see that their prices are not the same. Their prices are not the same. And it seems one is easier. One is easier to price than the other. Maybe it may be personal opinion, but by my experience, page 48, obtaining and charging for professional. I know we are around that. It's around maybe around 44, 45 years that we ended it. So, but let's start from a topic that is. So I said, if you sold goods before and you've rendered and sell service or you're selling services, you will observe one thing. One is easier priced than the other. And to me, it's easy to price commodity than to price services. And maybe that's one of the reasons that the Nigerian regulation mandates we service-oriented people that if we want to incorporate a company, we must pass through EFCC. We call it school. Because it's possible for us to just wire 3 million, 5 million, and they say, okay, what is this one for? Advice. But say for good, okay, which good? Maybe fan. How much is fan here? How much is fan here? So they begin to. But services. So it's easier to price goods than services. Now, how can we, as practitioners, chartered accountants, price our services? Actually, it's a bit difficult. Because the truth of the matter is, service is personality oriented. It depends on a lot of things. Where we are pricing, who we are pricing from, how we are pricing it, and the like. Because it's knowledge base. It's knowledge base. If you go to KPMG, PwC, and like, their pricing are totally different from if you go to SME, that is small and medium practice. It's different. But the same services. Most likely the same quality. What we differ is who that is the brand and the like. So all that many accountants price far below that, which is not so good for the profession as a whole and for us individuals too. Because when we price ourselves because the pricing is not that the will not accommodate. So pricing is important. Obtaining and charging for professional work. I read from my notes now. That is just by the way. Audit practice, we want to increase the size of their client base as a means of increasing the profits of the practice. So just like we are talking about turnover, we are selling, the more clients you have, the better turn you have. This can be achieved by promoting our reputation in the business community and being recommended by existing clients. We call it referral. So practice actually dwells on relationship. That's why as accountants we cannot break down relationship. Because we are people that we don't advertise. We are constrained when it comes to advertisements, which most likely we will get to today. See, expressly they did not tell us we don't advertise. But by implication, we know that that is what our rules meant. By advertising, publicity and promotion. So these are some of the ways that we can increase our fee and expand our practice. Advertising now. When a professional accountant in public practice or public service solicits new work through advertising or on other form of marketing, there may be a threat to compliance with fundamental ethical principles. Example, self-interest threats to compliance with the principle of professional behavior. Because there is no how we are going to promote ourselves if care is not taken. There is a very thin line that we must not cross, which most likely we are going to cross. Because if I want to price, we want to price the same product, we are both shatter and accountants. I must look for why I'm better than you and why you are better than me. And immediately we start to do that, we are only harming ourselves. We are only harming the profession. Are we getting it? So that is why it's all about relationship. Like you see me, I come, I will tell you I have a practice. That is how it works. So you see PwC managing partners in clubs. CMP owners may not be able to be in a club, in this club and the like. But in little way we can be too, we must ensure that we are meeting people. That is how practice works. Because we cannot advertise. It's not about paying for the advertisements. It's out of it. It's about our rule. It's about Nigeria or outside. Generally. It's a general rule. It's a general rule. See, they are not telling us now not to advertise. Part of the way we can, advertisement is listed here. But we know that when it's okay, if you want to advertise, your signpost should be, they give us that who want to notice it. And they specifically will tell us this is where it should be located. It should be located in front at the entrance of your office. So it's somebody that knows that we are here, like people are coming in, that will come to your office. Yes. Yes. So those are the advantages that they have over the CMPs, small medium practice or practitioners. But smart practitioners too must know that he or she must meet people. Okay, so for people that are joining us, we're on page 49. The main requirements, okay, advertising and publicity activity by accountancy firm are therefore regulated by Ican. It's regulated. And Ican through the code also did the same thing. Note that Ican has adopted the established that the main requirement for marketing professional services are that the advertising marketing and the publicity material used by any firm must not bring into disrepute the professional body as a whole. Accountants. Must not bring to disrepute our profession as a professional body. 2. Should not make exaggerated claim. We must not make exaggerated claim of our services. Now say, how do you want to advertise yourself without telling people what you've done or what you can do better than the other party? You just must showcase something. And in showcasing, if care is not taken, we are having the profession as a whole. The qualification possessed, let me read it again, should not make exaggerated claim for services offered, qualification possessed, experience gained. It should be honest and truthful and not misleading. It's provided by other firms. This one, you bought this one for how much? Bought it for 30 naira. This one, see, it's 15 naira. It's big. This is the only thing I can tell you. It's part of marketing, like, and they do not want us to be involved in things like that. So we must not discredit the service provided by other firms. So even though we see that our colleague, the profession and the delivery of their services to maybe our new clients is not that good, the service provided by other firms. So even references to unsubstantiated comparison must not break any local recognized code of advertising practice. In addition, it is recommended that advertising and publicity material should avoid any reference to fee. So, if I've been advertising myself and you have client auditors before, one of the fundamental things you want to know, apart from the quality of services, is how much. And that important information is lacking in the advertising. If the fee are mentioned, there should be a statement of the basis on which the fee are fee of other service providers, that is other professional accountants. Ican Professional Code of Conduct and Guide for Members states that if a chartered accountant in public practice is in doubt whether a proposed form of advertisement or marketing is appropriate, they should consult this. You know what to put into your career and your delivery. So that is what you are going to charge back. The same service, let's say audit, or it could be even non-audit. You know what you are going to deliver. You know how you are going to deliver it. And you are going to charge based on that. Another colleague is going to charge the same thing differently. So it's personality based. Who is behind this firm? It's important to their price as accountants. Even though they guide us generally, I think for managing partner per hour should be around maybe 30 to 50,000 per hour. So if a managing partner full day multiplied by, so for somebody appearing in your office as a managing partner, let's do this. Is that not 400,000? So Nigeria spend money on or earn as income or make as revenue for business owner. So we go to Ican website now, we will see under member category, you will see also this information as practitioner, the guide per hour that you should charge, like general approach to fee. The question of setting the price provision of service is always a sensitive matter. Page 50. We're on page 50 now. Because of disputes that may arise if the fee are unreasonable, like the example I just gave. But even now, before, our fathers, they charge per hour. Like I just calculated when we say that it may not be realizable. But now, charges should be value based. Should be value based. And with this is more reasonable. And this day, as practitioner, we should charge based on value. Based on value. Somebody engage us. Let's do maybe HR review of HR and quickly let them review it. Like how many staff do they even have? And for how long do they use the document before it can be changed? And what has happened before and like by the time that's okay. So amount. But if we want to charge per hour, you can even undermine us as professional accountants. It's possible for a client that maybe okay, yeah, I think it's already 1 hour just because, and you know that it should be embarrassing. But you are charging per hour, and they know the more you are still with them, the more they will have to pay. So, but when we charge based on value, it's better. The engagement that you are engaging us on, this is the value that you are going to receive. We may not communicate that, just estimate it. 5% or 10% of it we will receive. Depending on if the value is high. Because 5% of 10,000 is how much? You understand? But based on value that they've received from us, they will charge. That is what we use, and it's more realistic than charging per hour. Charging per hour was what we were using before, but it undermines us as professionals. Okay. So when we are talking about value, we are talking about the contribution. After we deliver that service, what advantage will our clients enjoy? Like let's say before they've been having HR issues, they now consult us. Please help us fine tune our HR. Let's have policy that everybody can abide with. So the opportunity cost of good staff gone because of issues and bad staff being recruited and the like. So by the time we cost all these things, when we structure this like value, we can estimate it. So it's been an estimation. Yes. Because basically when I was working there's a charge if the engagement partner. Yeah, like I mentioned. Yes, so everybody has their own. So once calculated, let's put it together, you want to find what it is. So that's what we're doing. Yes, then now this value is value. So estimation now is then subject to. Yes, even the first one is an estimate. How do we calculate that? Okay, training one should be charged out 15,000. Because that was calculated by how much was the charge? It's on the now. So you want to say something? So like because now anything we should reality. Yes. So if okay, so how would I charge? Let's say because I've done this maybe 5 minutes. That will not. Yes. That aspect that one is when we did the last time. Yes. Is the how to measure the value that the question for that one. You want to answer? Okay, so that's the same question you have. Okay, so how to measure the value like I'm telling you this. Let's say HR, they tell wrongly. So what was the cost of recruitment? They will have it right. We should have maybe a bit of knowledge about it. What of the value of officer recruited before, but because the environment cannot accommodate him or her, it happened to the person working with resigned. So, what is the opportunity cost of that person that ordinarily we would like to retain but left us? Incorporate it. And other human issue that they had, by the time we sum it together, okay, for how long do they use this service or this document after we've done it? Let's say 3-5 years before let's modify it. Like, so by the time we cumulate all those things together, and that's it, that's like this of this. It's more reasonable down. By the time we say, okay, because we can spend 3-4 weeks doing that, and we are charging them based on how. But this one is value. So, but where our own environment is peculiar is this. Because it's based on value, you can say, okay, we will deliver it tomorrow. Because we know the ordinary issue that HR matter we have. So we can deliver it tomorrow, but the peculiarity of Nigerian environment is by the time you deliver it tomorrow, you'll be like, the work he only gets today. For 3 hours, loan charge, you need 300,000. That's the peculiarity of our environment. Services or knowledge base are not well paid for in our environment. So, you're welcome. But in abroad, is million dollar information. I've never had Nigeria is $1 million information. Because they appreciate and value information and services there. But yeah. Okay, let's move on. Thank you for that. For example, a self-interest threat to professional competence and due care may be created if the fee quoted is so low that it may be difficult to perform the engagement, which sometimes happens, maybe because of the need in the life of the accountant. And somebody just approach him or her, will you do this thing for me? Anything you can just give me something. Meanwhile, it's not himself alone or herself alone, it's or she's representing us. So when he collects that or she collected that, by next time when that person or that organization wants to engage accountants, they will not want to pay more than that, even though they are receiving, of course, more value than that. Making the clients aware of the terms of the engagement and in particular the basis on which the fee are charged. And when it comes to those ones that I can give us, that basis in the 3P elements of assurance, we remember the people, the person that engaged us, the MD himself or herself, maybe for working 30 days, 500,000. Few Nigerians even get 500,000. And somebody is engaged 1 week, say managing partner at 50,000 per hour, and managing partner stays for like a day. Where are we going? How are we going to argue it that man or that woman that at the end of the day will receive 500,000 for 22 working days or 30 days in a month from somebody that wants to within 3 days offer a service and collect 500,000, and he or she are issues, and these are reality. These are not paper, or these are reality of what business entails. Please a bit loud. whole transaction, let's say 100 million excess charge established. Of course, by the time we take ourselves to court, it may be above, maybe below. But let's say we from our own end have 100,000. So we can now say, okay, 100,000 will be recovered for you. Or we can now say 80 million will be recovered. Let's say at least 80 million. And we are sure at least 80 million will be recovered from you from this 100 million that we established. So you are giving us, let's say, 10 or 20% of the value, yes, because that value is tangible. They are giving us 20% of it, and out of that 20%, what we normally do on the field for that is the recoverable amount can actually, even before we start to work, give us so amount. Then after we've recovered it, because it's possible at the end of the day may not be recoverable, or they can say they even settle out of court. Okay, thank you, it's okay, we engage in the court. It has happened before that bankers will just, because they know what they've done, they say, yes, okay, so what should we do? So it can happen by that time, the practitioner, where will he or she be? So that is why for services like that, have something, and even before you start, then after the value received, then after they receive it, which they are going to be aware of, then we take our money. But you would not have anything, and at the end of the day, we will not win the case and like all the efforts. Okay, so making the client aware of the term of engagement, and in particular the basis on which the fee are charged and which services are covered by the quoted fee. Assigning appropriate time and qualified staff to the task. Ican Code of Conduct states that a member is entitled to charge for his or her services, where the basis of the fee has not specifically been agreed. Then a member should charge a fee which is fair and reasonable, taking into consideration the seniority of the professional experts used, that is the staff member of the accounting firm, the time they expended, the degree of the risk or the nature of that engagement, and the responsibility that we carry, and the priority and the importance of the work given to our clients. So the priority and the importance basically is talking about the value. Do we understand? That's value. Because if it's not important to them, they will not even call us in the first place. Other Ican Code of Conduct guidelines. Ican advises minimum charge-out rates in respect of fee, like the one I mentioned. A member should inform the client in writing prior to commencement of any engagement. Like the example is cited, or the question is asked. If by the time we were engaged, we did not tell them that, okay, whether we recover or not, we are taking so amounts from the onset, and we go into the work. That's all. So we must let them know from the onset that, okay, we agree 30% of the recovery, but we want you to contribute amounts. And so by the time we finish the recoverability exercise, then offset what you've given us and give us the balance from our percentage that we are due to. Yes, at least you have something from the labor. That is why it's usually segment. Some accountant will not segment it. At the end of the day, they can spend like 3 months on that one. At the end of the day, nothing recovered. No exercise is completed. So it's good to segment even from our own part that, okay, 20% of whatever we agreed on and the percentage covered was give us so amounts out of. So by the time we recover balances. But by that time, they will not even want to hear anything if there is no written agreement or prior notice. especially for our work, people they want to receive value, but they don't want to pay anything knowledge-based, which is not tangible. Especially when they've enjoyed it before payment as well. Firms should not quote a level of fee for new audit work which is lower than the charge by existing auditor. That is, we are incoming auditor, the outgoing auditor, let's say, is charging 300,000 by that audit. By the time we are engaged, either we consider taking 400, but we should not go to that level. But by the time we go below it, we are not only undermining ourselves, we are undermining the whole profession. But of course, many accountants well, yes and no. Why not? Why not? It depends on the value. See, those names, they are good and as good as it is. It's a brand. It's because of the brand that's this question. Are we together? Are we together? Let's move on, please. So the answer is yes. An individual or an SMP can charge. Why not? They are professional colleagues. The difference is that name. We are on the field. Let me tell you one of the disadvantages. I don't know, maybe one of us can testify to it. When some tendency is there that the person will be very highly skilled, but narrowly skilled. Highly skilled, but will be narrowly skilled. Let's say the person is in audit. Yes, you cannot say, okay, he's bank audit specialist. He's petroleum audit specialist. But for SMP, you not only be in tax, you be in audit, you be in consulting. At the end of the day, the person is a bit of a generalist. And after our people move from KPMG and like, they outside of the organization. Because they can only fit into that particular, which may not be available in their own capacity as a person. It's happening. But a generalist may, or she may be trained in a little firm, but has a bit of almost everything that clients may require. When performing audit work, firms should ensure that their work complies with auditing standards. And this is one of the reasons you can charge even better than them before opportunity comes. Because it's the same standard, it's the same knowledge, it's the same capabilities. It's only opportunity that makes the difference. The work done was in accordance with auditing standards. The client was not misled as to the basis on which fee for the current and subsequent year were to be determined. So we should always carry our clients along and make sure that we understand the basis. Even though they will want to argue, because almost everybody will want to know why he or she is paying for what. Fees should generally not be based on percentage or contingency. Like the one after we recovered with, that's contingency. For audit work, reporting assignments or similar non-audit role. HAMA provides that the remuneration of auditor may be fixed by the director. I want to believe CSM in particular. So the directors can fix, but actually the shareholder that engaged us. So they are acting in the capacity of an agency theory. So they can fix the price. Majority of the time they usually fix it. So when we are talking about tendering, we are talking about just the same way people bid for work on the field, like commodity. So that is tendering to us too. A client or a new client needs auditor. So they can tell 3-4 audit firms. So we now submit our own, submit your own, like, so they review it and pick the person that, or the firm they believe carry it out? Do we have staff also? Do we have resources for the client's assignment? Can we meet the deadline? These are some of the questions that we must ask ourselves before we engage or even make a tender. So tendering process. You know that in Nigeria now we call it the rule of public procurement. The rule of public procurement. So just the same, like the same process. We want to buy something. So vendor registration. By that time we check from auditor to vendor because they want to engage us. So vendor registration. They notify public. We need auditor. So auditors, accountant will begin to submit their forms, and they will have given criteria. Must be registered, must have CTC for 3 years, must have that's tax certificate, tax client certificates for the past 3 years. They can say must have minimum or so staff, must have this, must have this. By the time we ensure that we comply with all those their criteria, then we can submit our own tender to, and they are going to consider a few audit them. Of course, a lot may be rejected, then they will eventually pick the best that they deem fit. The principal benefit to the clients of a tendering process should be lower audit fee. One of the key areas why tender or group of procurement exists is to ensure cost effectiveness, because several firms are competing for the work. So at the end of the day, we are still going to get what we call low balling, in which an accountant has an insider, and that last auditor, how much they charge? No, so amount. Okay. Let's just minus 50,000 to ensure that we will be given that assignment. So that's low balling. That low balling, practically I experience it, but be confident that the client is one that it can deal with professionally and economically if the tender is accepted. So why tendering in the first place when we believe that we may not be able to work with the clients, or they may not be able to pay our fee? So that knowledge falls under familiarity. So we should know a bit of them to determine whether we should even submit application or not. If the tender is not accepted, the time and cost involved in the tendering process has been wasted. And as accountants, we must always guide our resources as much as we want to ensure that we are engaged in a lot of things. We should also ensure that we do not waste our resources in getting what we want to achieve. The tendering process should be broken down into following stages. So, collection of background information about the possible new clients. Who are they? So, who was their last auditor? Do they have, or this is their first time audit? Who are they? Who are the executives? We want to know them so that we can determine all those things. And nowadays it's so easy. You just know their name and just a lot of things. The company may have a website, may not have a website, but the staff will have posted and included he or she is working at that place now. Somehow we begin to know more about the organization, how the people, and be able to decide. Establish the precise scope of work. And this is critical for us, because if we do not do that, by the time we begin to render service, they will be calling us to do more for any price discussion or fee discussion. Carry out the preliminary audit risk assessment and prepare the preliminary plan for the audit work. So that is Of course, our estimated fee should be included in the tender. Then we must prepare for submission of the documents, which will be online now at this time. Hard copy too that we need to take to their office to submit. An outline of key character of the firm. These are like our proposals. Classification of the nature of the work. If they say is the nature auditor, so it's going to be audit work that will be tending for. We can now inform them other services that we render. The statement of requirements. Oh, sorry, something just came to my mind that the two of you just did. I remember what happened last week. The laptop that crashed. One laptop crashed. It was your own. Okay, I just remember. The person is not even around that. An outline of how the work will be performed, the proposed fee, the range of other services will render. So these are things that naturally will come to us when we want to tender or submit a proposal for an audit. Their geographical location should be considered. Like let's say we are a little audit firm, but the client is located, let's say in Port Harcourt, Abuja. Like we must ask ourselves, are we going to be able to go and audit them if eventually they allow us to work for them? So those are the questions that we must ask ourselves. I'm trying to stand. I believe there are things that are related. I want to see we should move on to some other things. Credit control within audit firm. So I will just discuss that. Page 54. The credit control should accountant or practitioner. What we sell is knowledge base. Should we sell credit in this place? The answer is no. But in business, we know there is no how credit and money will not be involved. Like, okay, you say, so amount is our fee. Pay us, let's say 60% first. So, before we collect the remaining 40%, that's not the credit. So, in business, somehow credit will be involved. So, how do we manage our credit? And this is so practical. It is so practical. Anytime, now I'm talking about myself. Anytime this aspect comes up, I usually can record for the person that checked me. Because by the time, after like 3 years that I've been in the firm, he ensures that we tell Gbenga, if you know you've worked and you've done a good job, you will not be afraid to approach anybody you work for or sell. Say, sir, man, what should I expect? If you are not able to discuss your view, then consider you do not work the way you work or something wrong with you. And that is helping me in my personal life as a practitioner now. Because we see a lot of our people that time and they have clients and they are working like their sons. But credit management is like some people can work with it. So where are we going to? Okay, so what are you going to pay us? Even from the onset of engagement, some people cannot just. So what are you paying for this or negotiate? But he ensured that even that aspect of training was imbibed in me, and I hope anytime maybe other auditor or our transactions, the payments, we should have a payment cycle. Just like all those things that the review, analytical review and like cash ratio analysis and like yes, they are practical. They are practical. So when is this person going to pay us? When are we going to pay this person? So we did not receive, we will not be able to pay. So when we receive, the next 1 week we those control and balances in practice, and that is what we are talking about. An audit firm does not charge fee. I'm wondering. It has to collect the fee that is charged. I think I made a mistake there. A failure to invoice clients promptly or a failure to collect payment within a reasonable time. Many times, accountants we do the work because we want to ensure we deliver the work on time. But we forget even to invoice our client, just to send that message or even the reminder that we expect our payments to have been made yesterday. Just that reminder mail, just that phone call. But we are more, let's deliver their job to them, which is good. But what about our payments? So we must be able to put process through in our receiving money that is due to us. Any such management weakness or weaknesses should be corrected if occur. You will not correct all this at the end of the day. The practice may not go that far because it's going to be cash constraint. Overdue fee are a threat to the independence and objectivity, and we agree because it's at a point because otherwise all you said is correct. We turn to a lot of things and we may lose our independence. The risk to auditor independence could be significant if the unpaid amount is material. When a client is in a temporary financial difficulty, of course, at least we will understand. Many times we know clients that can pay us, and we know clients that will not pay us, and we know clients that can pay us but refuse to pay us. So we must be able to know how to deal with the individual. When a client is in a temporary financial difficulty, it is permissible for an auditor to make commercial arrangements for state payment and like. And sometimes it may not even be monetary when they are undergoing something like that. We may say they should not even pay us again. If the organization for maybe a year or two will not be under any obligation to pay them. So those are commercial opportunities that accountants will have. People who forgo the money and agree that they should convert it to some other things. But we should be more careful on professional ethics and like so that we will not break those boundaries. For future audits, I think that's important. For future audits, if the audit engagement is routine, the auditor should pay particular attention to the going concern assumption. Like if the whole world last year did not fit and they called us even this year to come and audit, we need to ask ourselves what is actually going on. When unpaid fees are owed by a client and the period of late payment is in excess of what might be regarded as commercially acceptable, the audit firm should consider whether it should be ethically appropriate to resign as auditor. So that depends on the individual. The ethic partner, like any other partner that we may have, the ethic partner of the firm should be asked to assess the ethical threats to the firm's independence for the payment being awards and the integrity. If the decision is to continue as auditor of the client, the reason should be documented. And likewise, if we are to disengage, we should document it likewise. Agreeing the term of engagement. So this discussion must happen from the onset when they ask us to come and be their auditor. The first thing is we should receive a letter of appointment. After they've appointed us and we admit, then we will go back and give them letter of engagement, which detail everything we discussed and what they need to know continue an audit engagement only when the basis upon which it is to be performed have been agreed on. And it is critical because as you begin to practice, some relationship will not be official. Just have your friend that wants to come and audit me, which is good, but it should be documented too. But if we do not document it, at the end of the day, anything goes wrong, we may not be able to have our own parts aligned with the regulation of the institute. And by that time, we feel like, oh, I thought this is not different. So what is going on? And the person may now take us official, forgetting the relationship where we were coming from. So we must treat official work officially, establishing whether the precondition for an audit are still present. This audit should be audit. Relationship anytime will lead to audit, but when relationship lead to audit, we should put all those processes that audit requires of us in place, confirming that there is a common understanding between us and the management or the client that engage us is very critical. And we use letter of engagement to do that. I think last week I was itemizing. I think that should be letter of engagement. I can still do it, but in my mind I think I did that in this class. Establish if the financial reporting framework to be used in preparation for the financial statement is acceptable. Like if clients calls us to audit, but they do not prepare their accounts based on IFRS that we are currently using. Let's say we use old GAAP. Even before we send a letter, management letter, we should let them know that they need to do conversion to IFRS. Because if we do not say that and document it, by the time we start audit, or maybe we can convert and we convert for them. Okay, for conversion there is the amount. No, it's not a separate engagement. But we knew that it's different assignments. So we need to let them know from the onset that the preparation belongs to the management and it must be acceptable based on the guideline that accountancy is currently using. To provide the auditor with relevant information, access to information, access to staff, access to their resources, to their locations, branches, and the like. The auditor is required to refuse the engagement. So some circumstances in which we can refuse to be appointed. A limitation on scope is imposed by management. Unless, especially, let's say from the onset, we are having periodic meeting and you are like, okay, so how do you operate there? And we ask the question there. Sir, Tracy, we don't do it here, everybody. We are going to be your auditor, we must have access to information together. So that's the scope limit by management. And we feel that it's so important to the objective of the audit. We can decide not to even take on that appointment at all. The financial reporting framework, we said, if the audit, if their financial statement is not even prepared based on the current framework, there is nothing to audit in the first place. So you must first of all do the financial conversion, then we will now audit. Management do not agree with the above responsibility. So we had these discussions with them, but they said no. So then there is nothing to audit. It's better we do not even start the audit engagement. So content of engagement letter, and please, even for any letter in our exams, there are some cheap marks when they are like, okay, we should do a letter. Like, you will forget a lot of the content. Please, we should remember every letter we have dates, we have subject matter, must be signed off. That's like 1.5 mark already. must have objective, it must have scope. It must not forget. Every audit must have objective. We call it audit objective in our report. And of course, by the time we are concluding in our report, which we are still going to get to, we must ensure that by the time we are concluding, we talk about our audit objective. Are we able to achieve it or not? Should be the conclusion of our report. The responsibility of the auditor must let them know. The responsibility of the manager of the management must let them know. Identification of the underlying financial reporting framework must let them know. Like if it's, the financials was prepared using old GAAP, must let them know why we say we cannot audit, and they need to convert their accounts. References to the expected form and content of any other reports that is issued. Like let's say now, Financial Act 2020, Finance Act 2020 is what we are using now. So if the prepared formally using, must let them know that some things have changed and it may affect the audit by the time we start to audits. Audits them. Sorry, I was trying to find out where the point was coming from. Because it is specified what the auditor will be doing and what the auditor's exact responsibility will be, the engagement letter is also seen to be an important way of reducing expectation gap. So like when we were talking about expectation gap, we need to use management letter or engagement letter to ensure we bridge the gap. I'm trying to scan through actually because those areas dealt with. Annual review, still on the same page but towards the end. Annual review of engagement letter. Each class, exam question can come. Please let us know that every engagement should have actually its engagement letter. Whether recurrent, whether personal audit, ordinarily should have its own engagement letter. Because every engagement is actually different. And if anything happens and we want to take fine to court, the first thing lawyers will ask is, okay, the engagement letter. Because that's the basis of the discussion. So you have to say, yeah, okay, we have for that for last year. And what we are discussing is this year and this year. That's the basis of discussion. I'm talking about real life event that has happened. So engagement letter is key to us and it must be on annual or audit basis. So we must review our engagements. Why do we need to review our engagements? If we do not review our engagements, a lot will go wrong. Like now, this Finance Act we're talking about. When we want to audit, we audited them last year. Are we going to audit them the same way we audited last year? The answer is no. Because even the tax that we must comply with, don't forget suitable criteria, has changed. So now the question we'll be asking is, how does Finance Act 2020 affect what we want to do and incorporate it into this engagement, which may not be any basis last year to have considered it. So we must always review our engagements. Like maybe last year they have a key staff, but this year the key staff is gone. How would that affect the organization and like must put it into consideration where we were working? Because the question now is, as auditor we ask questions. Maybe that's the person we've been relating with. We must ask them. So who are we to relate with this year as regards your audits? So a lot of reasons that we must ensure we review every engagement each time. Circumstances mean that the term of engagement needs to be revised. Management needs to be reminded of the existing term and of the engagement. Also, any indication that the entity misunderstands the objective, especially maybe our experience last year with them, may make us let us review our engagement. Maybe last year they were creeping a lot of other assignments into our audit objective. So this year, let us so that we know the scope of our audit. Any revised or special term of audit engagement, maybe there are other things we want us to do for them. Recent changes in senior management, we must consider it. Like I said, any significant change in ownership, let's say they have ownership buyout, maybe management buyout, takeover, and like significant change in nature or size of the business. It's even possible that we were able to, last year we were able to audit them, but this year we not even audit them because they've expanded. So we must consider all these things. Any legal change or regulatory change like the Finance Act and so many other reasons for us to review on an annual basis. Acceptance of change in terms of engagement. So let us say we should ordinarily review every year, but client comes to us that's good. Let us discuss this our engagement. That's what we want to discuss now. Acceptance of a change in the term of engagement. The entity might, in certain circumstances, ask the auditor to change the term of audit engagement. This might result in a genuine change in circumstance or from a misunderstanding as to the nature of any audit as originally requested. So, first of all, we need to hear them out. If it's genuine and we align with our code of conduct, so we can consider it. However, it could result from a situation where the auditor is unable to obtain sufficient appropriate audit evidence, like we have a scope limit as a result of management not giving us information, then we can even disengage. The entity might then ask for the audit engagement to be changed to a review assignment. Maybe we've been auditing them before. That's okay. Let's be doing assurance services, not or other assurance services, not real audits. Like now, a lot of engagement will turn to that, receiving that one of the aspects of the Finance Act is what we call SME, small medium enterprise. We not reach the threshold of 25 million now. The acts permit them, they don't need to do a lot of like tax and like so even have an auditor. So the question now is why do we want to? So if let's say last year we audited them, they were making 10 million, but we still audit them and take something. By the time they hear it this year, they're expecting for the auditor. So we are still on accepting the change. And a lot of changes like that. So like that's point that would not audit because they did not meet the threshold this year now. You may say, okay, yeah, but continue with us to help us check this aspect of our work. So it's not going to be audit again because now they know that they don't need to do that aspect. So our audit engagement now will turn to other assurance engagements. So if clients begin